Sell in May and take a mulligan. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for May 28th, 2018, here at the end of the Memorial Day weekend. And I say that, sell in May. And that's a famous saying, sell in May, go away. The thinking that institutional traders have made most of their profit first half of the year. They can take the summer off, come back after Labor Day, and wrap things up. I kind of smile at all these homilies like sell in May, go away, and buy the rumor, sell the fact, and the Santa Claus rally, and all that kind of stuff. I prefer to stay focused on the reality of the charts. And in early May, I was talking about selling, not because it was May. I don't care what month it is, but I do care about the pattern on the charts. And it looked like we were breaking down under the Ichimoku cloud, under the 200. It looked like it was going to head short, and then it did not. It went up, and there's a couple trades I would like a mulligan on. But I'd like to go back and do those over. That's a golf term that in casual golf rounds you can redo the previous shot with no stroke, no penalty. But the good news is, we went short, had a couple trades stopped out, but we used risk control, so the losses were very small. And we had the reality of some other trades heading up, and we got some really nice profit on some long trades. So we are trading the reality, and there are no mulligans in the market, right? If you get a loser, you take your hit, and then hopefully you're using risk control and you just control that. So what's going to happen next? That's always the big question. Well, it's difficult to predict right now. The market is in a bit of equilibrium. For nearly 2 weeks, it has gone flat after heading up, breaking up above previous highs, above the Ichimoku cloud, positive momentum. It is now trading in a very narrow range. Even news that the summit with North Korea was off, and then maybe it was back on, didn't really move the markets. So we just have to kind of wait and see which way it's going to break. Now there is an interesting analysis that I'll show you, and what we have here is what's called symmetry in price, the amount that price moved up and then down and then up, and in time. And when there's a pattern, at least for a while, that pattern has a tendency to repeat until it doesn't. So here on the S&P 500 daily chart, here was this move up in April, up starting in early April toward the end. You can see this blue line. The market moved up, and then the move up in May was pretty similar in terms of price and time. It followed a very similar pattern. Go ahead and put that back. Now I've drawn this red line where price went down, how far it went down and how long it took. And if we, oops, wrong line. Grab the right one. I just busted up that triangle. If we were to draw this line and go, well, what happens if it were to go down a similar amount? If there were symmetry, the ups had symmetry. If this down were repeated, what would that look like? Well, it would look like it's hitting the Ichimoku cloud and the 200. And so even though this is an uptrend, higher high, higher low, higher high, probably a higher low, this would kind of make sense. So will it happen? Well, let's watch the next couple price bars, and if they're down, this could be the short-term pattern over the next week or two. So that's an interesting analysis and something to watch. It doesn't look like it's going to be dramatic at this point. So not real strong. These are some interesting analysis. Not a high probability. We'll watch it and see if it's interesting. Right now, I don't think the high probability trades are in the indexes until they really declare a direction. So we're taking individual trades on issues that are not moving with the indexes. Let me show you an example of that. Here's a stock that we took about 2 weeks ago. This is CLNE, Clean Energy Corp, Clean Energy Fuels, and you can see this chart looks nothing like the S&P 500. This thing had fallen out of grace and then found a bottom channel a little bit, broke out, and we caught it right here at 209. It's up here at 263. Really, really nice profit so far. We got a target at 303, so it's too late to get in this trade. But some of these smaller cap stocks that are moving to their own pattern are really, really interesting, and that's where we're focusing right now. And there are some short plays. Here's Citigroup that we shorted at 71. No, we got short at 69.96, and it's heading down nicely. And looks like it is going to hit this retracement zone between 64.25 and maybe down to as low as 55. So there are individual trades out there. Again, I don't think the action is in the indexes, but in individual charts right now, and that's where my trading is focused. So let's go ahead and take a look at gold and oil, as always, before we wrap up this week's update. So here's the gold futures contract on a daily chart. And as noted before, gold is in a ragged, slight uptrend. We got a higher high, higher low, higher high, higher low here. It looks like it's reversing and starting to head up. Now on the daily chart, not quite proven yet, but when we look for an early indication on the 60-minute chart, data's loading right here, we got a nice pattern, higher high, higher low, higher high, higher low, finding support. So we think the beginning of a new move up on gold could be starting, and it looks pretty interesting. Bring that daily chart up, and it could have a run like it has in these past moves, something similar to that. So we're watching for that and see if there's some trades that show up. Let's take a look at oil. Well, oil had been amazing in a very bullish run, really starting in the summer of 2017, running up all through that, a minor correction, another run up over $73, and now a bit of a pullback back to the cloud. Now I think the analysis shows this run could continue up to about $80 a barrel, but this pullback is completely normal. You know, higher highs, higher lows, higher highs, higher lows. Looks like it's finding a little bit of support here at the cloud, so maybe even a little bit lower, and then another run up again, up as high as 80 in the near term. Near term meaning, 2 weeks to 4 to 6 weeks, something like that. Well, that's the update. Again, index is tough right now. We're waiting for direction. Good trades on individual stocks. Gold looks like it's starting to head up. Oil pulling back, but we think still bullish. All right. As always, appreciate your comment, your feedback, your question, and respond to every single one. All right. Take care.